welcome to today's Battery Show. We're going to focus on tin today. We're going to try and understand the supply demand fundamentals, who are the players in the market, and indeed how can we invest into this little known commodity. Joined today by Rome Resources C-Suite. We've got Paul Barrett and Mark Gasson. Guys, how are you?
Good, thanks yourself, Matthew.
And Paul, why don't you introduce yourself, and then Mark, do the same if you don't mind.
So I'm Paul Barrett, the CEO of Rome Resources. I'm a geologist by trade, so much happier underground than overground. But Mark's the same. Mark.
Hi, I'm chairman of Rome, and very very familiar with the area that you're working in. I was involved with the initiation of Alphaman's exploration programs. And today, that's one of the a top company, 1.4 billion market cap. We have the licenses to the north, so very familiar with the geology and mineralization. So we hope to do the same again.
Okay, and a little thing, I will want to talk to you a little bit about the doing business in the DRC a little bit later, Mark, if I may. But first, let's start with the supply demand fundamentals. It's important to know who's who, where does this come from, where's the demand come from, and quite frankly, because there's little information, a lot of big private tin companies, not a lot of public market stuff, the knowledge is a bit scant. So, Paul, what do we need to know on that front?
Well, firstly, the tin market is not particularly large. That actually, in a way, I'll explain later, but that helps us. That works in our favor. But it's 400,000 tons a year. And historically, it's been, until the mid-2000s, it was running about 200,000 tons a year. It was kind of stable. The growth of China in the 2000s bumped that up to 300,000, and since then it's been starting to grow again. So there's a kind of, in a way, a second phase of need for tin. The expansion in China was predominantly the growth of China in electronics. The use of tin for electronics there is no replacement. So it is basically the connective tissue of the electronics, and so consumer electronics is kind of flatlining, but then we are seeing massive demand now from AI, both AI, so the massive computing technology, and amounts of chips that are required, and therefore the amount of tin, and also in solar, the increase of solar energy, and also in electric vehicles in terms of the battery technology. Also, there's 3 times more tin in an electric vehicle than there is in a conventional one. So there's a lot of positive movement in terms of demand for tin going forward. And because it's a relatively small market and a relatively small amount of suppliers, that when you get problems with supply, such as in Myanmar, where they shut down the production, in Indonesia, where there's some problems as well, so those make a significant impact to the market. So it's not, you cannot easily replace the production overnight of tin. It's not like some of the other commodities. So I think the increasing demand from the electronics industry and the limited amount of supply that can make up that gap is what's giving us our opportunity.
Right, and you've talked about some of the suppliers there. China's a huge producer, but also consumer of it. We've got Indonesia, Peru, Bolivia, Malaysia, Singapore. In fact, as a child, I remember standing on a tin dredger in Singapore. There's not a lot of information coming out in the market. It's hard for us public market investors to really truly understand the kind of supply gap, if there is one, and what this thematic looks like going forward. Is it a relatively stable market despite its size?
Well, I think it's stable in terms of the use of tin and in terms of the over day-to-day usage of tin in industry. The International Energy Agency did some numbers, and there are 3 scenarios going forward to 2040. The 3 scenarios in terms of how far everybody goes in terms of actually undertaking the Paris Accord agreement deadlines, and all of them, even the lowest of the projections, calls for a doubling of tin production or tin demand over the next 20 years. So, it is relatively. It's a bit like, in a way, it's a bit like the phosphate market. There are a limited number of producers, as you said, a lot of private companies, and so information is relatively light. But we have with our project, we're hopefully at the top end of the grade. There's a lot of the bulk production in China and Australia, which is very, very low grade, 0.1, 0.2%, that kind of thing. Alphamin next door to us is running at its highest grade in the world in terms of producing mines at about 4%. So we've got a really, really good play here in terms of grade, which helps a lot obviously in terms of profitability.
Right, and obviously great, and scale is the thing that you're working towards demonstrating as well. And I guess giving some clues about what that margin looks like eventually, but it certainly helps with grade. If I look at China, 30% of the world's production, 47% of the world's consumption, they obviously still have a big influence in terms of price in the market. So just in terms of those kind of fluctuations, sensitivities around the kind of ex-China supply into that demand, can we take comfort that there's enough ex-China supply out there that the markets are going to look, I guess, more predictable going forward?
Well, I don't really know if they're going to be predictable. I think there will be upward pressure on the price, I think, because of demand elsewhere. I don't think it's I think the risk of the low, a low end for the price going forward is very low. And I think we've got a projection here that looks like it's going to be, regardless of China, the rest of the world is going to be needing the tin as well.
Right. Okay.
So if I can interrupt, sorry, Matthew, if I can interrupt for a sec. Basically, the International Tin Association, they're predicting that for the next, we're going to be requiring another 50,000 tons of tin annually. So if you look at our current position, where we are, with assuming we're successful, we'll be in production by 2030. I mean, that means that there has to be another 300,000 tons of tin that has to be added to the whole equation. So, and with the current lack of mines coming on stream, new mines, and all the sort of the other the producing mines under strain as well, this has to affect the tin price in a very positive way, and we might be, will benefit the most from it if at that point in time, 2030.
You make an interesting point there, Mark, because we were talking about copper yesterday, and I think pre-1990, the average time from discovery through to production was 12 and a half years. It's now up to 18 years from discovery to production, right? Tin, you're suggesting that why are you able to get into production so quickly? What's the process?
Oh, it's been done before, next door. So, yeah, from discovery to sort of feasibility study, that was probably around 2-3 years, and then another 2 years into development, and production within 6 years. I mean, that's it's been done, and there's no reason why we can't do the same thing in next door.
Right. Interesting.
Yep.
So we kind of got a sense of who some of the players are, how they kind of feed into that. In terms of public market, I say not too many tin plays available for folks out there. How do you view the tin market in relation to some of the other battery metals? It sounds like a much sort of simpler to understand, quicker to revenue so far seems to be the main benefits. What else is there about the tin market that sort of appeals to you guys?
Well, I think that the fact that it's got varied uses, it's not, you're not relying on one particular sector to give you that demand curve. Tin obviously has historical usage, and there is a background, as I said, of about 150,000 tons a year of use for what you might say old technologies. That's still continuing. So it's not as though tin is reliant on the development of AI, et cetera, to be a worthwhile commodity, a valuable commodity. But we are hoping that this demand in advanced electronics will really push it over the edge in terms of demand.
Right, and I'm going to just stick with the supply stuff for a little bit, because I want to really kind of milk this conversation, because I don't know. I'm starting from a very low base. Okay, when it comes to public markets, I think a lot of the explorers have been sort of struggling the last 3-4 years because of lack of access to capital, or at least cheap capital. With tin being sort of, I guess, a small, like I keep calling it, esoteric type commodity. Has there been interest from institutional? Do the institutional investors, funders, debt providers, do they understand the space well enough to help companies like yourself in the public markets?
Well, I'm not sure that there's been that the market has been tested enough in that respect. I mean, in terms, as you say, I mean, there are three or four maybe tin-focused explorers in various parts of the world. Quite a few in Cornwall and Western Australia. But I think the institutions would be looking at us. I'm not sure that our 14 million market cap is ready yet to get large institutional investors. Once we get our holes drilled and our resource numbers and our market cap up, I think then we will start to be come on the radar of the institutionals. But I mean, the thing is, I know, as you mentioned, tin is kind of, well, esoteric, but it's just a specialist commodity. I mean, thinking esoteric, I'm thinking helium here. I mean, there's a lot of hype on helium. We'll see where that goes. But tin is a really fantastic commodity that's used everywhere and is increasing. So I don't see it as esoteric. I just think it is a bit niche.
Okay. Well, no, that's fair comment on the wording. Let us move forward, gentlemen. I want to talk about, and I'm refer people to the slide that I've just pulled up here. A global tin use by application and top 10 tin producers. Now we sort of talked a little bit about this. Mark, what can you tell us?
Okay, so basically, it's pretty obvious that the biggest use of tin is solder, and I believe that the true value of tin has not been understood. If you take solder alone, you have every iPad, every smartphone, every computer. Everything contains tin. Everything electronic contains tin, and 50%. I mean, there you're looking at on last year's sort of production. You probably have, it's around 160,000 tons of tin alone, just on the sort of on the solder side. And as Paul says, the other, the sort of use in chemicals, tin plate, and the rest of them, that stays the same. So that's not going to disappear. So when you have all these, all these new applications coming in, AI, by the time we're ready for production, as I mentioned, around 2030, there'll be a 10% increase in the requirements. So basically, there's definitely going to be a lot more use requirements. And I just can't see, with the current scenario, no new mines coming on, or very few. With the current tin prices, there are definitely some sort of mothballed mines that would come on stream as well. But that's not going to make up for the deficit. So yeah, and then if you look at the top tin producers, as Paul has already mentioned, you've got China will be under pressure, especially as the supply from Myanmar will be reduced substantially, and that puts pressure on their own uses. Indonesia, they bring in export restrictions, and you'll probably find half of that will be available for export. I think the only positive one is Congo. And you have Alphamin, which are beefing up to potentially 9% of the world's supply, and that'll be in the very near future. and it leaves the door open for us to sort of increase that. That's probably one of the few areas where we'll be able to see a substantial increase in world production. Peru, San Rafael, they already under strain as well, because and they are starting to sort of investigate the potential of getting of sourcing tin from the waste dumps to sort of to keep up with their production. So, and that could affect their sort of roughly 9% of their supply. So all in all, there's definitely the doors open for a very a big sort of drop in the available tin, and then the use that's going to be a long sort of a very strong upward curve. And as I mentioned previously, 50,000 tons additional every year. I don't see where that's going to come from.
Well, it's going to need to be funded, and maybe that's a conversation for later. But just you hit upon a point there, which I referenced at the beginning. I want to talk about, which is the DRC, right? I think there's a preconception from long legacy projects and images around the world from 20 years ago, still stark in people's minds, were the mining of cobalt in country, child labor, etc. And it's still there. I was speaking to a fund manager, this week, and that sort of intimation was there for me. Talk to me about two things. Talk to me about the ability to do business in country without being affected by, well, I'm going to use the word corruption and etc., because that's the perception out there by some. Okay, I know different, but I want you to explain to me and the folks listening and watching this why it's different. So that's the ability to do business in country, and then to do business ethically in country. Mark.
Okay, sure. Okay, so basically, as I said, we've been in the Congo for 23 years, and the whole time has been with public listed companies, and there is zero scope for corruption. Everything has to be done all above board, and no sort of bribery is tolerated. And the fact that we have to stick to those guidelines or work according to those sort of principles. Everything takes a lot longer, but it gets done. The job gets done. And and you'll note that in the Congo itself, there are very few junior explorers or other sort of serious mining companies. It's predominantly dominated by China in the Congo itself. And we are one of the few companies that have been there and managed to sort of navigate all these obstacles. So on that side, we clean on that front, and that'll never change. And as far as operating in the Congo, there's no scope for child labor or any of these other things. We have to work strictly according to Western standards. And Alphaman again is a good example next door. It's a proper commercial mine, and it's brought stability to the whole area. It's very all the negative press that you might see is totally unsubstantiated, because there is no scope for us to work outside the guidelines of Western procedures.
Right. Okay. And obviously, thanks for dealing with those in terms of doing business and doing business ethically. In terms of the mining code in country, banks will want, if when you get to the point where you're in debt balance, they'll want to be able to perfect security. Is the mining code there something which is comparable to working in other countries, whether it be in Africa or elsewhere in the world?
I would even go as far as saying it's safer to work in Congo when it comes to mining code, as opposed to a lot of other countries, especially in Africa. That is one area where they are very strict. As long as you meet your commitments, pay all your fees, and that's pretty much all it is, really. Pay your fees and get and do all the correct reporting. You will not lose your license. And it's also with our experience in the Congo, it's all about keeping good relations with the authorities, and that's sort of key of one of our successes, I believe, is that you have to.
And I want to be clear here because I think, I certainly went my time working in Africa, 25 countries in Africa, what we saw was a lot of companies sitting on assets. I think Paul's indicated already that you want to be kind of quick to market, get to production quickly. So there's no sitting around or waiting. But what's your take on various African DRC and other African governments starting to get a little bit more, I guess, control back from miners and maybe making sure miners are behaving in a way that's reasonable? Do you agree with that?
No, I think from my experience anyway, as long as you are, you are doing what you set out to do, and they are receiving their royalties and payments. They're always small challenges, but you're not going to lose the license or anything like that. As long as you are doing everything according to the regulations. So I think that is probably our least concerns in Congo.
You've also got to kind of bear in mind that countries like DRC, a lot of countries, not just in Africa but around the world, are relying on resource for their main income. And for example, Guyana and now Namibia, places like that, they will see that if they help the people get to production and keep producing, then the country will benefit enormously. And I think that's definitely the case in the Congo.
Yeah, I'll give you an example in Congo. One of our first sort of projects was Motor Gold, which is Kibali gold mine, and where we discovered 20 million ounces. And today, so basically, Rand Gold bought out Motor for 500 million. And they've subsequently been taken over by Barrett. And today, you have a whole town and employment. It's probably one of the biggest, one of the most developed cities in Congo. And that's simply because of the success of the mine. So mining really brings stability to the country. Very little comes from the actual government itself. And it puts quite a bit of stress on the mining companies themselves.
Okay, interesting. Okay, I think I know I kind of skewed that conversation over to the DRC, but to get back to the macro here, I'm going to pull up a slide which talks about tin price again. Paul, you've touched upon this, and when I talk about sustained pricing environment and what the forecast may look like. Paul, do you want to talk to this slide?
Yes. So the future pricing. So interestingly, over the past 6 months to a year, you've seen copper and nickel and zinc prices rise, but tin has kind of detached slightly from that and has risen more as cobalt has stayed in the doldrums. So it's interesting that the market is seeing that tin is potentially underpriced at the moment. And that it's always good to have that overpressure. It's not good to have a spiky price, and I think that it's difficult. It's a bit like the oil price. It's difficult to predict where the price is going to be in 10 years' time or 6 years' time when you start production, for example. But I think all the indicators here are that the use of tin in these advanced electronics and technology is going to really keep the price moving upwards. And I think that graph at the bottom is interesting in so much as it's an indication of the use of the tin and the production and the shortfall. So the graph, it's not that easy to read, but basically it's in three parts. So the first two columns, the first column, the green, all the columns that have the green are basically the usage of tin. And so in 2019, it was about 50-50 traditional, and they're calling it here green transition. So, I lump everything from solar and new electronics into it's 50-50. And the orange on the right is tiny, and that's the shortfall, the deficit in production. Come to 2025 prediction, the traditional kind of stays the same, and the new technology, the green transition, increases. and you develop a deficit, you develop a shortfall, even in 2025, by this research. This is Roskill research. By 2030, it's looking even starker in terms of a deficit. So I think that points towards the fact that even from 2025 onwards, we're going to be seeing tin deficit. And as you mentioned, if it takes in a lot of jurisdictions 18 years or whatever to come to production, there's no quick fix. The quickest fix is opening up mines in DRC, but that's obviously where we come from.
Yeah. There might be a bit of bias there, but I'll take it.
And potentially other jurisdictions with a similar outlook to bringing things on quickly, not Utah. Yeah,
yeah, and I guess the thing to point out here, and with all commodities, grade is usually king, but you've still got to be able to demonstrate that scale. I think the interesting thing that you said to me today really is the kind of speed to which you can get to production, and that's a very interesting conversation, because to me as an investor, I'm thinking, well, hopefully not another 15 years of dilution where you're having to raise money to keep going through the process, and therefore my dollar is worth more. So that's intriguing. Right. Okay. So I think the slide, which I kind of want to move on to and finish, and it's sort of, again, touch on some of the things that you said earlier, which is around some of these new use cases for it. Now, all metals want to talk about the green revolution because that's where all the money's going. That's where governments are pushing us and businesses too. We've seen green coal. Yes, we have, folks. Green coal, green iron ore, and greenification of everything. But in this case, the historic use cases can definitely tick that box. And I guess the use cases going forward with things such as solar and AI data centers, etc., tick that indeed. So again, Paul, what are we looking at here with these diagrams?
Well, the left-hand diagram is basically simply solar, and as we said, solar at the moment accounts for roughly 5% of tin usage, so it's relatively minor. But with the growth of that and the strong use of tin in solar panels and solar cells, that's only going to really blow up. So this is starting to show from 2024 onwards. Basically a change in the landscape in terms of solar energy, and therefore the percentage of use of tin by solar in the overall demand is going to rapidly increase. I don't think there's any way that's not going to happen, to be honest. And so you've got the solar will take up a lot of demand, or will increase a lot of demand and generate a lot of demand is the word I'm looking for. And also artificial intelligence will do the same in terms of the amount of chips that are required to do this. And not only that, but the amount of energy that's required to run all of this. It all points to everything in the electronic world uses tin, and therefore as this moves along, again, it's a kind of a positive future for tin itself.
Right, and can I just understanding how the market works for companies like yourself. I think with battery metals more broadly, that's been, companies will engage with metal traders. The metal's always been there, and it's all good. There's a very simple route to market. But what we've seen more recently with the advent of OEMs is that car manufacturers, battery manufacturers are moving upstream and securing supply because they're fearful that they may not be able to get it when they need it, given the forward-looking forecasts on demand. With tin being a small space as it is, do you think that the buying behaviors, the buying structures will have to change and adapt if people are to secure the tin that they need? How do you view that? I mean, either of you come at that.
Good question. I have to think about that. I think
it's an interesting one, isn't it? Because normally you'd sell your concentrate, and and then that becomes someone else's problem. But in small markets, we've seen it with despite sort of nickel and copper being sort of abundant, as it were, you've seen a wholesale lithium, we'll see with its spike recently, wholesale change in the way that people approach accessing the commodity. And, traders are having to find new ways of working as industry says, well, actually, people like, Mitsubishi, Mitsui, let's say all the Koreans, all the Japanese getting into North American markets and securing future supply much earlier in the food chain. I suspect it could be similar for you guys, but I don't know.
No, I know. I mean, I think it's happened more in the copper nickel space to date, but for tin, I think yes, it looks like that could be quite a good way of marketing your tin. I mean, for example, have Nvidia and companies like that who would maybe require kind of offtake agreement or something like that. So that adds another potential route for financing, of course.
Well, absolutely, and I think that's pretty much where I was going, because again, it's a reflection of how some of these companies have been funded in terms of not just equity investments, but also at asset level and debt or bridging loans being made available for companies to advance projects through to natural conclusion. And I guess near-term producers will be the beneficiaries of that. Anyway, that's a great question for us to go away and ponder and research. So that's a goodie. Guys, I mean, I really appreciate it's going to give us a nice sort of overview and touch upon a few things which people can go away and think about, and maybe, I say, do a bit more research. We certainly will be. We like what you're doing, like the speed to market, obviously love the grade. Next question of you guys going out and demonstrating that scale. So we look forward to following you. It's great interest.
Yeah.
Appreciate your time today. Thank you.
Yeah.
Excellent.
Thank you, man.
Thank you so much, Matthew. Yep.